Hello and welcome to Mindbridge Edge 2023 and today's session on decommissioning controls to improve your overall control environment. My name is Joe Welch and I am the Global Implementation Lead here at Mindbridge, and I'll be your host for today's 25-minute session. So, what are we covering today? Well, hopefully we're going to shed some light into the mysterious art of internal controls, but also provide some guidance to those that have to deal with internal controls in their day-to-day activities, whether that's designing internal controls, executing them, reviewing them, or testing them. The insights that I share are based not only on my practical experience, where as a consultant, I specialized for over a decade in the provision of risk management, internal controls, and data-driven assurances across multiple industries, but also in my role as Mindbridge Implementation Lead, where I have worked with a lot of you in attendance today in embedding anomaly detection into your respective control frameworks. Now, the aim of this webinar is to help bridge some of the knowledge and understanding gaps that currently surround semi-automated internal controls and help paint a picture of how they fit into your control landscape and what we should be looking out for when having to deal with these types of controls. We will discuss how the ever-changing ever-changing control environment has seen a rise in these types of semi-automated controls. We will also identify what type of controls in your internal control frameworks may no longer be responsive to risk. And we'll also discuss how to decommission these controls while still improving your overall internal control environment. These concepts, I think, will be very, very relevant if you have business processes enabled by cloud technologies and where you have a strategy to move away from monolithic architectures such as those implemented by SAP or Oracle ERP systems. So, firstly, just a quick recap on the different types of internal control. Now, no one company is the same, but everyone's internal controls will broadly fall into one of these buckets. Your control environment will be kind of made up of a selection of these types of controls. And as I mentioned, no one company is the same. There's no one size fits all. Every industry, every company within different industries is unique in that nature. But all of them will have IT general controls. Now, IT general controls apply to all layers of an IT landscape, whether that's the systems, environments, components, processes, and data. Now, IT general controls are further split into 4 subcategories. You can have access to programs and data, program changes, program development, and also computer operations. Now, an important point worth highlighting here is the fact that if ITGCs are not deemed effective in your control environment, then the application and semi-automated controls that follow will also be less reliable. And so what do we mean by application controls? Well, application or access controls, as some of you may refer to them, are those controls that relate to roles and authorizations within your organization. Who can access what system, transaction, or information in general. Now, segregation of duties falls under this category alongside restricted access or prevented access. Now, restricted access means that the access is restricted to a specific group or individuals. Prevented access means that access is typically not given to business users. So think of those ERP restrictions of who can access what screen and who can access which data table. Now, semi-automated control. Now, some of you may also know this as IT-dependent manual control. They mean exactly the same thing. Now, with this type of automated control, human intervention is still required on the execution of the control activity. the control owner's action is dependent on the output from a system. Now, we will dive into this type of control a bit later on, but this is an area which has a direct impact on the degree of external audit reliance if your ITGCs are effective. And lastly, manual controls. Now, the last control type, manual, and everyone out there will have a huge chunk of their business or process controls that fit into this category. They can be preventative, they can be detective in nature, but these are performed by control owners outside of business systems. Many examples of these: reconciliations, sample-based reviews, sign-offs, approval limits, or approval workflows as well. So they are broadly the different types of internal control. We're now going to identify which types of these controls are no longer responsive to risk. And so how do we identify those that are no longer responsive to risk? Well, this is actually a relatively easy exercise to do in your organization. Put simply, wherever you have a business process with the following setup of controls, where you have ITGCs, application controls, and manual controls, this is an area that is no longer responsive to risk. Manual controls in this day and age are not effective. They've actually never been. They're either looking at a small subset of a population, or they're a too high a level to detect application controls that are not working. Now, just to step through these examples that I've put up on the page in front of you, we'll start with journal entries. Now, for journal entries, your organization may have a control where journal entries over a certain dollar threshold are reviewed, potentially allowing higher risk, lower value journals going completely undetected in your organization. Similarly, you may have a control centered around account reconciliations. In fact, I know if you have customers on the call that have this, whereby you will perform a subjective assessment over your accounts. You will determine the frequency that they require a reconciliation. Maybe over a dollar threshold requires monthly reconciliations. Maybe you have some accounts that require quarterly. And for the low risk accounts, you require an annual reconciliation to be performed. Now, the problem with that is those lower risk accounts that were detected, there may still be anomalous activity occurring within them. For vendor and customer invoice, these types of manual controls that you'll have, and it might not just be one, you might have several within this, these large business processes. But again, often organizations are implementing a manual detective control in these processes, such as random sampling, or again, a dollar threshold for review. Now, these reviews are typically and often performed in isolation for that particular entry or particular document type. The reviewer or the control owner will be looking specifically at that invoice or maybe a credit note, and they may possibly agree the underlying data, the information that exists on it, to master file data. Sometimes they might not do that at all. But they're not really looking at it from a higher level, or they're not looking at the patterns and trends relating to the particular customer or vendor relating to that invoice. Or, put differently, they're not looking at the particular employee that has raised or received that document as well. You know, does that particular invoice warrant that further investigation? Is that particular invoice over a certain dollar amount? Yes, it is, but where does it stand up? Is there a flurry of invoices at that same time that's occurred? Is there a particular user that's posted this invoice that's never posted one before? Travel and expenses. Now, most people out there have submitted an expense, I'm sure, at one point in their life, in their professional career for sure. But the reality is only a small fraction of expenses that have been submitted are actually reviewed manually by an organization. Dollar thresholds, again, for review are often applied, leaving a vast number of business expenses that are potentially inaccurate or worse, unapproved and unauthorized. Payroll, in my opinion, payroll is probably the most tightly controlled financial process within organizations' control frameworks. And because if you get payroll wrong, typically the employee will be the first to notice and tell you that you haven't been paid enough. But there's a flip side to that. Overpayments, duplicate payments, these tend to happen and can happen and does happen. And this is because of the manual controls that exist in a payroll process. There's normally an individual or a team of individuals in a payroll function whose job is to review the payroll. And in very large organizations with thousands of employees, this can get very difficult to perform on a maybe a bi-weekly basis or a monthly basis. Human error exists everywhere where we have manual controls across all these financial processes. And there's many more not on this slide that do exist within your organization. Just had a question come through, and I forgot to mention, please feel free to ask questions as we go. I'll try and answer them as we go. And we've got one come in saying, do you think auditors will push back on decommissioning certain controls? That for me is a great question. I'm holding it for now, and hopefully I'll kind of answer that as I go through the next slide. Great question, keep them coming. How do I decommission non-responsive controls? Well, the good news is it's actually a pretty straightforward answer. You replace manual, detective, non-responsive controls with a semi-automated control or semi-automated controls. Controls that technology like MindBridge has in abundance. Now, MindBridge, for those that are not aware, risk scores every single line of data in a financial or operational data set and tells you where to focus your review or investigation. Now, as a control owner, before you've even logged into MindBridge to review your invoices or your journal entries or expenses or payroll entries, it is applied its ensemble of anomaly detection control points, and it's risk scored 100% of the data. Now, if you were to perform that task or those tasks, there's many of them, manually, this would take you longer than your professional career. It would probably take a lot longer than that as well. And these types of semi-automated controls can be occurring on any cadence, any frequency, whether that's weekly, monthly, quarterly, annually. And so you can multiply out the effort in order to perform these types of controls, these types of rule-based, traditional, statistical, machine learning tests. Now, the benefit of increased operational efficiency is therefore an obvious one. It ensures that employees are spending, or control owners are spending more time on strategic initiatives rather than working long hours on manual and repetitive tasks, reviewing those invoices, reviewing those payments, reviewing and approving those manual journal entries. Semi-automated controls drastically reduce the odds of human error and fraudulent manipulation. Additionally, they greatly simplify the knowledge transfer process required during a transition of roles among employees. We're all in a job, we've all changed roles, we've all had similar roles, changed organizations. Once you have an internal control that is automated or semi-automated, there is also a significant difference when testing these manual or semi-automated controls. And this is where I link back to the question we have on, do you think auditors will push back on decommissioning certain controls? Well, if you have to comply to Sarbanes-Oxley, as many organizations out there, if you have to apply to SOX, studies have actually shown that reducing manual controls and increasing automated controls testing has a significant impact in SOX compliance spend of a company. Now, manual processes that consistently or constantly require the involvement of employees, consultants, or auditors are just not sustainable. In the long run, having automated controls testing is more stable, largely because this enables a repeatable, reliable, and predictable framework while significantly lowering the cost of compliance. And so that's why I think that auditors wouldn't have a pushback on decommissioning certain controls. In essence, it reduces risk. It reduces those human error touch points. That's all we're talking about here is decommissioning those manual controls and replacing them with a simplified semi-automated control. Now, don't get me wrong, semi-automated controls can be tested and treated much like an IT general control. With MindBridge, you would be testing the configuration of MindBridge maybe on an annual basis, and the elements that are human, the human part of the investigation and the review, maybe you decide that you're going to review the riskiest journal entries or riskiest invoices. Obviously, as an internal auditor and tester, I would be testing a sample of those to make sure that that control owner has reviewed. But a big chunk of this control already, the automated part of it, you'd be testing that configuration. Hopefully I've answered that question okay. Got a question here. Who is usually the one to make these assessments and plan what to do? Great question. So internal controls are the responsibility of first line, their responsibility of management. They own the risk, they own the controls, they're the ones that have to perform them. So ultimately, management will be the responsible person for controls. However, in some organizations, there is dedicated internal control teams, essentially the second line of defense. Now, internal controls teams will help the first line, will help management design these controls. They'll make sure that they're designed effectively to mitigate the risk in order to achieve their objectives. Now, internal control design and testing sometimes falls within internal controls teams, but you then have internal audit who will then provide a level of assurance over those controls, the third line. So controls kind of impacts all lines of defense, the first, second, and third. And so they're all kind of working in tangent, but ultimately the person that's making those assessments and planning what to do, I would say they lie in that kind of internal control team, but very much working with a finance, purchasing, billing, whoever's performing those controls, as ultimately they're the ones that have to perform them, and in some instances self-certify that they're operating effectively and efficiently throughout the year. Hopefully that's answered that question. The actual design of internal controls, depending on your organization, depending on the industry and regulation that you're under, normally this a design review will occur annually, and where you're reviewing all of the controls, your internal control frameworks annually to make sure that they are operating effectively. This exercise can be performed obviously more frequently, quarterly, and with the use of application controls and semi-automated controls, you now have that flexibility to review control performance on a lot more frequent basis than you would if all of your controls were manual. I'd give the example of manually reviewing invoices, and that can take a lot of time. And if you're reviewing invoices every week, How easy is it for an internal audit team to provide assurance that that control is working effectively? They can't do it every week. They can't do it every month. They typically incorporate that into their internal audit plan and maybe test this on an annual basis, sometimes even more. So just wanted to kind of mention that yes, it's management first-line responsibility. They own the risk. Internal controls are there to support and design. Then internal audit are then providing that level of assurance afterwards. Just going to look at some of these examples here as well, and go into a little bit more detail around why semi-automated controls are important, and replacing manual controls in frameworks. Going to pick on travel expenses now. I brought it up earlier as an example. Historically, you would submit your expense. It would fall in a bucket with all other expenses in the company, and then it'd be up to maybe your line manager or somebody dedicated to review those expenses. Typically, they may be over a certain dollar threshold that require a review, and the rest automatically get pushed through based on the limits of the expense types that you've put in. Now, what this doesn't account for, a manual control, is trends, actually looking at the type of expenditure, the type of location where this has occurred, the departments of the people that are raising expenses. You lose all that with a manual review. You're just reviewing that expense in isolation. Is it over? Is it within the threshold? Is it to policy? With a semi-automated control, particularly on travel and expenses, you can investigate those most anomalous charge code holders. Who are the people in your organization that are putting all their expenses in one big bundle, or if there's a peak, if there's a particular expense that they're, or a merchant that they're always using, is there a merchant that somebody else isn't? So this type of information can be garnered from a semi-automated control, not just on travel expenses, but also other business processes as well. Journal entries I like to touch on there as a semi-automated control. Manual journals, in essence, are you can either have workflow approvals for some of these journal entries. Your ERP system may be sophisticated enough to have a workflow approval. Often it isn't. Often journal entries are posted with people with those application controls, those accessed in order to post it. You may have a control where you have to review or approve these journal entries after the fact. Well, with Mindbridge, with their anomaly detection, Mindbridge is looking at that journal entry in the context of all journal entries that have been posted in the year, and it can then spot and investigate rare GL account interactions, typical and atypical patterns for your business. And so I think that's something that's really powerful here, is that semi-automated controls don't just limit the time, or don't just reduce the time in order to perform the control, but it's also analyzing 100% of the transactions in the data set and giving you insights into what's normal and abnormal into your business. And as a value add activity, whether it's internal audit or internal control or management, you then have all of this insights at your fingertips to improve your efficiency within your business. And that can lead to multitude of benefits. If you're looking at vendor invoices, it's tighter purchasing control, less AP leakage. Similarly, on customer invoices, could lead to faster payments being received. Travel and expenses, again, I've talked through. So I can't believe that's almost at the end of the time. That time went far quicker than I thought. Thank you, everyone, for the questions asked on the way. Please feel free to email me, LinkedIn message me to continue this chat on internal controls and semi-automated controls. I can talk about this for days, and I love talking about it too. But thank you so much for your time in this session, and hope you enjoyed Mindbridge Edge so far.